I think second quarter activity certainly was the peak, and going into the second half of the year, we do expect to see some sizable loss of momentum. Still positive, but a significant decline from that above 4% GDP level. A lot of temporary factors going in to support that above trend activity that we do expect to wane as we move towards the end of the year. And I think this is going to translate into a much more patient tone at the Fed. Now, of course, we have the September FOMC meeting coming up just in a few days from here, less than 2 weeks. And I do think that the Fed is going to move forward with that additional 25 basis point hike, which is very much priced into the market. But going into the end of the year, if we continue to see a slowdown in the consumer sector as a result of still disappointing wage growth, if we continue to see red flags in the housing market with sales now in the red for 5 out of the last 6 months on an annual basis, if we continue to see top-line GDP slow from that more optimistic pace, again, as I mentioned, above 4%, back to the trend 2.5-ish% GDP, and inflation stays at 2% or even flirts with falling back below that 2% level, I think it's going to be very difficult for the Fed to justify an additional rate increase by the end of the year as a result of that clear loss of momentum.